Smart accounting, leveraging AI for effective financial decision-making. In today's rapidly evolving business landscape, leveraging artificial intelligence in accounting is no longer a futuristic concept, but a necessity for effective financial decision-making. This presentation explores how AI is transforming accounting practices, offering unprecedented accuracy, efficiency, and insights. From automating routine tasks to enhancing predictive analytics, AI is revolutionizing the way businesses manage their finances. Discover how embracing AI can provide a competitive edge and drive smarter, more informed financial strategies. Introduction to AI in accounting. Definition of AI in accounting. AI in accounting refers to the use of intelligent computer systems to perform tasks traditionally done by human accountants. This includes automating processes, analyzing data, and providing insights to improve financial management. AI systems learn from data, adapt to new information, and make decisions with minimal human intervention. The growing importance of AI. The importance of AI in financial management is rapidly growing due to the increasing complexity of financial data and the need for real-time insights. AI enables businesses to process vast amounts of data quickly, identify patterns and trends, and make informed decisions that drive profitability and growth. As businesses continue to generate more data, AI will become even more critical for staying competitive. The evolution of accounting. Traditional accounting methods. Traditional accounting methods relied heavily on manual processes, paper-based records, and spreadsheets. This approach was time-consuming, prone to errors, and limited in its ability to provide real-time insights. Financial reports were often delayed, making it difficult for businesses to respond quickly to changing market conditions. The digital transformation of finance. The digital transformation of finance has brought about significant changes in accounting practices. With the advent of cloud computing, data analytics, and AI, accounting processes have become more automated, efficient, and accurate. This transformation has enabled businesses to access real-time financial data, improve decision-making, and enhance overall financial performance. AI technologies in accounting. Machine learning. Machine learning algorithms enable AI systems to learn from data without being explicitly programmed. In accounting, ML is used for fraud detection, predictive analytics, and automating routine tasks. ML algorithms can identify patterns and anomalies in financial data, helping businesses make more informed decisions. Natural language processing. Natural language processing allows AI systems to understand and process human language. In accounting, NLP is used for automating tasks such as invoice processing, extracting data from financial documents, and analyzing customer feedback. NLP can significantly reduce manual effort and improve efficiency. Robotic process automation. Robotic process automation involves using software robots to automate repetitive tasks. In accounting, RPA is for tasks such as data entry, bank reconciliations, and invoice processing. RPA can significantly reduce errors, improve efficiency, and free up human accountants to focus on more strategic activities. Key benefits of AI in accounting. Increased accuracy and efficiency. AI automates repetitive tasks, reducing human error and improving efficiency. AI systems can process vast amounts of data quickly and accurately, ensuring that financial reports are reliable and timely. This allows businesses to make informed decisions based on accurate data. By automating routine tasks and reducing manual effort, AI can significantly reduce operational costs. AI systems can work 24/7 without breaks, increasing productivity and reducing the need for overtime pay. This leads to significant cost savings for businesses. Enhanced decision-making capabilities. AI provides real-time insights and predictive analytics, enabling businesses to make more informed decisions. AI systems can identify patterns and trends in financial data, helping businesses anticipate future challenges and opportunities. This leads to better strategic planning and improved financial performance. AI-powered data analysis. Processing vast amounts of data. AI systems can process vast amounts of financial data from various sources, including transaction records, bank statements, and market data. This enables businesses to gain a comprehensive view of their financial performance and identify hidden patterns and trends. Identifying patterns and trends. AI algorithms can identify patterns and trends in financial that can be difficult for humans to detect. This includes identifying anomalies, predicting customer behavior, and forecasting market trends. These insights can help businesses make better strategic decisions. Predictive analytics for forecasting. AI-driven predictive analytics can forecast future financial performance based on historical data and market trends. This includes cash flow projections, revenue forecasting, and budget optimization. These forecasts can help businesses plan for the future and mitigate potential risks. Automating routine tasks. Invoice processing and management. AI can automate invoice processing by extracting data from invoices, matching them to purchase orders, and routing them for approval. This reduces manual effort, improves accuracy, and speeds up the payment process. Bank reconciliations. AI can automate bank reconciliations by matching transactions between bank statements and accounting records. This reduces manual effort, improves accuracy, and helps identify discrepancies quickly. Data entry and categorization. AI data entry and categorization by extracting data from various sources and classifying it into the appropriate accounts. This reduces manual effort, improves accuracy, and ensures that financial records are up to date. Fraud detection and risk management. AI algorithms can identify anomalies in financial data that may indicate fraudulent activity. This includes unusual transactions, suspicious patterns, and deviations from established norms. AI enables real-time monitoring of transactions, allowing businesses to detect and respond to fraudulent activity quickly. This reduces the risk of financial losses and protects the company's reputation. AI can enhance internal controls by automating compliance checks and monitoring employee access to sensitive financial data. This reduces the risk of fraud and ensures that the company complies with regulatory requirements. Improving financial forecasting. AI-driven predictive models. AI-driven predictive models can forecast future financial performance based on historical data, market trends, and economic indicators. These models can provide insights into future revenue, expenses, and profitability. Cash flow projections. AI can generate accurate cash flow projections by analyzing historical data and predicting future cash inflows and outflows. This enables businesses to manage their cash flow effectively and avoid potential liquidity issues. Budget optimization. AI optimize budgets by identifying areas where expenses can be reduced and resources can be allocated more effectively. This helps businesses achieve their financial goals and improve overall profitability. In auditing. Continuous auditing capabilities. AI enables continuous auditing by analyzing 100% of transactions in real time. This reduces the risk of errors and fraud and provides auditors with a comprehensive view of financial activities. Analyzing 100% of transactions. AI can analyze every transaction, providing a more thorough and accurate audit than traditional sampling methods. This helps identify high-risk areas and ensures that financial records are reliable. Identifying high-risk areas. AI algorithms can identify high-risk areas by analyzing transaction patterns and comparing them to established norms. This allows auditors to focus their attention on areas where the risk of fraud or errors is highest, enhancing customer experience. AI-powered chatbots, personalized financial advice, streamlined customer onboarding. AI-powered chatbots can provide instant answers to customer inquiries, improving customer satisfaction and reducing the workload on human customer service representatives. AI can also analyze customer data to provide personalized financial advice, helping customers make informed decisions. Finally, AI can streamline the customer onboarding process by automating data entry and verifying customer information, improving efficiency and reducing errors. AI for regulatory compliance. Keeping up with changing regulations. AI can help businesses keep up with changing regulations by automating compliance checks and monitoring regulatory updates. This ensures that the company complies with all applicable laws and regulations. Automated compliance checks. AI can automate compliance checks by analyzing financial data and identifying potential violations. This reduces the risk of non-compliance and helps businesses avoid costly penalties. Reducing compliance-related risks. AI can reduce compliance-related risks by ensuring that all financial activities are conducted in accordance with regulatory requirements. This protects the company's reputation and reduces the risk of legal action. Case study: AI implementation success story, company background. ABC Company is a leading provider of financial services with a large customer base and a complex financial infrastructure. The company faced challenges related to data accuracy, efficiency, and regulatory compliance. Challenges faced. ABC Company struggled with manual data entry, time-consuming bank reconciliations, and a high risk of fraud. The company needed a solution that could improve data accuracy, reduce operational costs, and enhance regulatory compliance. Solution and results. ABC Company implemented an AI-powered accounting solution that automated routine tasks, improved data analysis, and enhanced fraud detection. The company achieved a 50% reduction in operational costs, a 90% reduction in data errors, and a significant improvement in regulatory compliance. Challenges in implementing AI in accounting. Data quality and integration issues. Poor data quality and integration issues can hinder the effectiveness of AI systems. Businesses must ensure that their data is accurate, complete, and consistent before implementing AI. Skill gap and training requirements. Implementing AI requires skilled professionals who can develop, deploy, and maintain AI systems. Businesses must invest in training their employees to work with AI and develop the necessary skills. Ethical considerations and bias. AI systems can perpetuate biases if they are trained on biased data. Businesses must address ethical considerations and ensure that their AI systems are fair and unbiased. Overcoming implementation challenges. Strategies for successful AI adoption. Develop a clear AI strategy that aligns with your business goals. Identify specific use cases and start with small-scale projects before scaling up. Building a data-driven culture. Foster a data-driven culture by promoting data literacy, encouraging data sharing, and empowering employees to make data-driven decisions. Collaboration between humans and AI. Recognize that AI is a tool to augment human capabilities, not replace them. Foster collaboration between humans and AI by assigning tasks that are best suited to each. The future of AI in accounting. Emerging trends and technologies. Explore emerging trends and technologies such as blockchain, quantum computing, and edge computing that could transform accounting practices. The changing role of accountants. Understand how the role of accountants is changing as AI takes over routine tasks. Accountants will need to develop new skills in data analysis, strategic thinking, and problem solving. Potential impact on the industry. Consider the potential impact of AI on the accounting industry, including increased efficiency, reduced costs, and improved decision-making. Best practices for AI integration. Assess your organizational readiness for AI by evaluating your data infrastructure, skills, and culture. Choose the right AI solutions that align with your specific business needs and goals. Ensure data security and privacy by implementing robust security measures and complying with data protection regulations. Measuring ROI of AI in accounting, efficiency gains. Quantify efficiency gains by measuring the reduction in manual effort, processing time, and operational costs. Financial impact. Assess the long-term financial impact of AI by measuring the increase in revenue, profitability, and return on investment. Accuracy improvement. Measure the improvement in data accuracy by tracking the reduction in errors and inconsistencies. Preparing your team for AI. Upskilling and reskilling strategies. Provide upskilling and reskilling opportunities to help your team develop the skills needed to work with AI. Fostering a culture of innovation. Foster a culture of innovation by encouraging experimentation, collaboration, and continuous learning. Change management techniques. Implement effective change management techniques to help your team adapt to the new AI-powered environment. Conclusion. Embracing AI for smarter financial decision-making. Recap of key benefits. AI offers numerous benefits for accounting, including increased accuracy, efficiency, cost reduction, and enhanced decision-making. Call to action for AI adoption. Embrace AI to transform your accounting practices and gain a competitive edge in today's digital landscape. The competitive advantage of AI-powered accounting. AI-powered accounting provides a significant competitive advantage by enabling businesses to make smarter, more informed financial decisions. Necessary transfers. TIMBY Necessary transforms real-time. Necessary transforms real-time.